What's up, everybody? Welcome back to another Wednesday night live stream real estate recap where we talk about everything to do with the housing market and some other stuff. We got another great live for you tonight. We're going to talk about the housing market like we always do. There's a lot going on. Inventory is up in a lot of markets across our country, but affordability is still really challenging. So we are going to talk about factors affecting housing affordability as some articles we'll go over. And yes, there was an election yesterday, and we do have a new administration coming in, and we are going to discuss the new administration in regards to the housing market. We are not going to talk about politics. This is not a political channel, but there is stuff to discuss when it comes to the housing markets. We are going to go over that. But before I do any of that, I want to bring on my great guest. She's a very good friend of mine. Her name is Laurel Murphy. She is a real estate broker in Maryland, DC, Virginia, Florida, and Maine. She is super impressive. In fact, before I bring her on, let me brag about her a little more because Laurel actually started investing in real estate herself and has acquired a really beautiful portfolio. She's only like 20. And so it's really impressive. So if you want to pick her mind or mine live, put it in the chat. And if you're watching this on the replay, then of course, put it in the comments and we'll definitely get back to you. So let's bring Laurel on. Why, hello there.
Hello. How you doing?
Good. Oh, I forgot to mention that Laurel's also my tennis buddy, although she's much better than I am. But she humors me by playing with me.
Not true. Not true.
We do have fun, though. I do like playing with you, although you are a lot better than me and a lot stronger than me. But that's okay because you make me look good because then we win. How's it going?
Great. Thanks for having me. I'm really excited to be here. So
yeah, well, I'm glad you're here. So let's jump right to this first article that I have. I'm going to get to it. I'm going to share my screen. It's by CNET. Hang on. Let me bring it up. Okay. So I was talking about how affordability is still a problem. Can you see that okay?
Yep.
Okay. So this is only written a couple of days ago, November 2nd. Most home buyers won't budge until mortgage rates drop to 4%, CNET survey finds. So let's jump to it. A recent CNET survey found that half of U.S. adults say lower mortgage rates would make them realistically consider purchasing a house. If average mortgage rates were to fall to 4% or below, that rate could potentially unlock the housing market. I don't know if it's going to happen anytime soon, but let's continue. Except bargain mortgage rates aren't likely in the near term. And experts say it would take a severe economic downturn for mortgage rates to reach the record lows we saw during the pandemic. After peaking above 8% in late 2023, average mortgage rates have been in the mid 6% range for a while. They could drop close to 6% by the end of the year, but that's still not enough to draw buyers off the sidelines. A mere 4% of adults would realistically consider purchasing a home or refinancing their mortgage at a 6% rate. 4%? That doesn't sound right to me. I don't know about that.
Might be waiting a while.
Now that the Federal Reserve has started reducing its benchmark interest rate, there's a chance we'll see mortgage rates fall 1 percentage point or more later next year. Okay. Because they're already up today. They were up. Yet even then, the CNET survey found that only 9% of U.S. adults would consider purchasing a home or refinancing at a 5% rate. Today's housing affordability crisis goes beyond just high mortgage rates. Home buyers, as well as home owners looking to refinance existing home loans, need relief from rising home prices and the overall high cost of living. So let's just talk about this before I continue for a little bit, before I continue down the article. Yeah. They're saying that if interest rates are 6.5%, 6% or above, only 4% of people would consider buying a house. And then it jumps to like half, because you got the 26, you add all that up, if it's below 4%. I think that actually business is starting to pick up a little bit. What are you seeing?
I think they might be waiting for quite a long time.
Right?
Do you feel that the rates are going to go anywhere close to 4% again?
I mean, again, maybe because they were, if you think about it, even before the pandemic, like I had refinanced my mortgage to under 4%. It was like 3.875 or something like that. And I know a lot of people were in the mid fours, something like that. I do think that we'll get there again. I don't know when, but like I just said, today interest rates are already going higher and they're predicting they're going to keep going higher. So I just think that this survey, and it doesn't really say how many people were in it, that
Right.
4% of people will not buy unless the interest rate is below 6% seems very low to me, because I think that activity is starting to pick up a little bit. I know that, I just put a house on the market. I didn't even put it on, and I already got like 2 offers on it. So I feel like maybe now that the election is behind us, people are starting to move forward. I mean, what are you seeing in your business? Are you seeing like a lot of activity?
What I'm seeing is the buyers that I've most recently helped, they're moving because they have a life event. I mean, they have to, my most latest clients, they are relocating, or they relocated from California. They didn't have a choice, you know, and we talked about renting for a year. They had moved from this area 3 years ago, so they were familiar with it. They didn't have sticker shock. California is just as high, and in some places a lot higher. But they knew the value of owning over renting. So they were really, that's what I'm seeing, actually, just people who they have a life event, they're relocating, State Department, federal government, this is where they have to be.
Yeah.
So
Where did they come from in California? Would they come from the north or the south?
They were outside of San Francisco.
Yeah, so it's super expensive. I mean, it's expensive everywhere in California, but especially up there, it's really expensive.
Yeah.
And I think you're right. Yeah, people will always move if they have to. I think that my broker calls it the 5 Ds. I don't know what they all stand for. I know divorce is one and death is one. Very
family, kids, right?
Yeah, diploma. That's one. Divorce, death, diploma. What are the other 2? There were 5. I don't know. Something else.
Yeah, but I mean, like in my case, I moved so I could move my parents in with me. The house I was living in wouldn't fit them. So that's a life event where it just was a better situation for them to live with me. So
yeah. How's that working out?
That's another hour. That's a different discussion.
But actually, it is something that I see a lot. There is a lot of
Mhm.
multi-generational families choosing to live together because it's just not affordable for them to live separately. So it is actually relevant. I just think that like people are finding different creative ways to buy properties today.
That's right.
I've heard of like friends buying properties together. I haven't experienced that. I don't know if you have, but certainly parents giving their homes to their kids, or kids inviting their parents into their homes. It's just become incredibly unaffordable to own a home today. I said in last week's live stream, my friend Jackie was on, and we were saying like I couldn't afford to buy my own house today.
No.
I mean, that says it all,
Yeah.
and I just became an empty nester, as you know, recently. And I always thought we're going to move into the city and we're going to downsize or go to the beach, something. But there's no way. I refinanced in 2021. There's just no way that I would leave my house now to go buy something that I couldn't afford and become house poor. It would make no sense to me.
And I think that's exactly why a lot of people, why inventory, a contributing factor to why inventory is so low, because there's so many people in that exact scenario who are not having a life event where they must move, or, so they're just staying put.
Right. It's that lock-in effect.
Yeah.
So we got Slip and Jimmy. He's a loyal, a loyal viewer. There's always a lot of federal movement coming and going to the DMV with the elections. This election, I think the coming, going will be more pronounced. So in my experience with elections, I'm doing this 22 years. I think you said 15 years, been through, a couple of elections.
Mm-hmm.
In my experience, it's my experience, but I don't work in rentals, but a lot of people that come in and out with their elections do end up renting. Mm-hmm. So I don't really, in my experience, have felt a difference in home sales or home purchases with different elections. Have you?
I'm sorry. I was reading the comment from Jill. Could you repeat that? I'm sorry. Because her comment there was, they're moving for a new job, but then they're going to be retiring. So they want to rent for 2 years. That's always the question too, right? Rent versus buy. So I apologize.
It's okay, but nobody else can see it, so I put it on here.
Okay.
But let's read it. Me and my husband are moving because of a new job, and we're going to be renting for the next year or two. Jill, if you are still on, tell us where you're moving to and where you're moving from. I'm just curious. And I don't blame you for renting. I am a homeowner. I do believe in home ownership, but if I had to move to a new place, I don't know. I've always believed in home ownership, but I also am a realtor, and I've been a realtor for 22 years. So I definitely have a skewed perception, as you do, I'm sure, Laurel, as well. But if I were going to move to a new place and I wasn't sure about where I wanted to live, I might rent at first. What do you think? What would you do?
So I always say, it comes down to how long do they feel that they are going to be in their next home. So I would say, do you think that you're going to live in the house at least 3 to 5 years? If you are, then I highly recommend purchasing something, because chances are you might stay maybe, 4 to 7. And
Yeah.
I've had a couple of clients in that exact situation. They work for the government. They still work for the government, but they knew they were going to be transferred at some point. And we had that conversation. And each one of them who did choose to buy made money. And then they applied it to the next place. So
I used to say, first of all, Jill's coming from Pittsburgh to Rockville. Yay. Come on
nice.
over to Rockville.
I have a rental for you.
There you go. We'll get you contacted with Laurel after.
That's right.
What were you just talking? Now I just lost my train of thought. Oh, I used to say 3 to 5 years. I now say 5 to 7 years, just because of what's happened. After 2008, it took a while I just know for my own personal house, for my house's value to come back. After, I used to always say 3 to 5 years, but after 2008, I always say 5 to 7, and even like at least 7, just to be safe, because I don't want people to buy, especially when the market's just gone up and up and up, gotten more and more expensive between home prices and interest rates. And then 3 years later, I had a couple clients that did leave after a couple of years, and they did okay because prices were still going up. Now that it's starting to soften a little bit, not necessarily in our area, but in a lot of markets across the country, it could be more risky,
Yeah.
All right, let's go back to this article. Good news, let's see. Despite limited optimism, CNET survey found that 40% of U.S. adults are either somewhat or highly pessimistic about, oh my God, this is us, highly pessimistic about mortgage rates becoming affordable by the end of this year. In 2023, housing affordability hit its lowest point in nearly 40 years. There is, however, some reason for optimism in the long term. Now that inflation has cooled significantly, the Fed made its first interest rate cut since 2020 at its September Federal Open Market Committee meeting. The central bank is likely to make more rate reductions over the next 18 months. The Fed's pivot towards gradual and slow rate cuts after having hiked interest rates aggressively over the course of 2022 and 23 marks a turning point for the housing market, which is especially sensitive to rising borrowing rates. Mortgage rates are expected to fall, but it won't be linear or quick. Yeah. And here's the chart on how optimistic or pessimistic are you about mortgage rates becoming affordable by the end of the year. Highly optimistic, 6%, somewhat optimistic, 16%, highly pessimistic, 24%, somewhat pessimistic, 16%, and neutral, 26%. These ads drive me nuts on this thing, so I'm going to stop this just for a second so we can talk about this, and then I'll go back. I don't know how to get rid of them, but with my ADD, I keep seeing the ads move, so I have to get rid of it for a second. Yeah, so like I said before, mortgage rates are already up today. From what I hear and just reading today, they are projected to continue to go up. We'll see. I have not heard anything lately, and like you, I work with mortgage lenders every day with our clients. I haven't heard them lately saying anything about more rate cuts. I used to hear it all the time. Oh, it's gonna be 2 or 3 before the end of the year. All right, well, now we're already in, second week of November. When's the end of the year? I mean, we're at the end of the year. When are they gonna come? Have you heard anything?
So I was speaking to the lender that I work with quite often today. And I said, "What's the rates today?" And he's like, "It's kind of tough because today they were around 7.25." And I was like, "Really?" Even if the Fed cuts rates, it's not a direct, uh, path to mortgage rates. Unfortunately, but
No,
it
it's
just
not.
aren't. It's
Yeah.
an indicator. But unfortunately, they could keep cutting, and mortgage rates could just stagnate. They could just not move really, and in the
Yeah,
direction that we're all hoping.
they usually will always influence mortgage rates. Like I feel like whenever the Fed cuts rates, the mortgage lenders and banks have already like kind of built them in, and they've already started lowering their rates, but they're not a direct correlation.
Right.
So Behersman says Fed is cutting rates, but does that guarantee long-term rates will decline? I don't think there's any. Well, that's not very nice. I'm going to put one on that's not nice. The next one. These chicks only guess and guess. Listen, Parosia, if you have a crystal ball, tell us what's going to happen. Because yes, we don't guess and guess. We are going off of data and experience, and nobody has a crystal ball. So started to get clap back a little bit, but I don't like it. All right, let me get back to this article. I got to get it back on. Sorry, I took it off. It just was driving me nuts. Okay, factors affecting housing affordability. An expensive mortgage market isn't the only obstacle for homebuyers. Rising home prices and limited inventory are also making homeownership out of reach and widening the generational wealth gap. Nearly half, 45% of U.S. adults say that lower home prices would also influence their financial decision to purchase a home. Since 2020, home prices have increased more than 40%, which also makes it difficult for prospective buyers to save for a big enough down payment. In addition to home prices coming down, 31% of the survey respondents said that getting a raise or having a higher wages would have significant impact on their decision to purchase a home. When the cost of living goes up, but wages don't keep pace, it's harder for people to save for other costs associated with homeownership, like insurance. And that is very true. Not only insurance, but if you happen to live in an HOA, you've got your HOA fees, you've got your property taxes. I mean, there's a lot of different factors. I don't know about you, Laurel, but I just got the notice from my mortgage lender saying that I need to increase my escrow because my monthly amount has gone up, not because of my mortgage rate, that's fixed, but because my property taxes and my insurance have gone up and they pay them. So I have to come up with another like $800 to put into the escrow that wasn't counting on. Did you get that too?
I've definitely gotten a lot of those notices. I have some investment properties specifically in Florida, but also here in Maryland, that because the values went up so fast during COVID and continue to go up at a fairly decent clip, right? Escrows are having a hard time keeping up.
Right.
Right. It says affordability. There's so many reasons why I'm hearing that my buyers are, definitely first-time home buyers are having a huge challenge just even qualifying to buy a home.
Yeah.
No.
I mean, I do agree with the article that, sure, if salaries would go up, it would definitely be helpful because when the cost of living goes up but the wages don't keep pace, they're right. It's harder for people to save for other costs. It's hard for people to save at all, and I didn't even look at let's look at their graph. It says, besides mortgage rate, what factors, if any, would play a role in your financial decisions? So 45% are saying home prices coming down, 33% saving for a big enough down payments, 31% getting a raise, higher wages, 20% saving for other costs like insurance, 21% having access to more inventory, other 6%, and then 24% not applicable. I wouldn't purchase a home. And 10% said they don't know. It's funny because I was doing research for the video that I'm putting out on Friday. And when I was doing this, it was saying that high interest rates are the main culprit keeping Americans tied to their homes. But, and in fact, 72% of Americans report being concerned about the current rates, rising to 81% for those under 50. And part of the issue is prospective buyers' salaries are not high enough to support these high interest rates and high home prices. And this is happening all across the country, especially in markets that really went crazy during the pandemic, like the Boise's and the Austins, where their property values just skyrocketed, and there's no way the local incomes could keep up with them. Remember, people were coming in from, out of state to live there. They weren't necessarily the locals that were causing all this, inflation of home prices. You brought up your investments properties, and I said before you brought you on, I think it's so impressive that you started young, and like I said, you're only 20, so you started really young.
Yeah.
And started investing in real estate yourself. I mean, how did you have I just want to talk to you about this for a second, and we'll go back to that. But how did you have I want to say a word, I don't know if I can say it on YouTube, the chutzpah to do that? How did you know you could do that?
Well, I'm 20 for the 20th time or 30th time, but so at that time I had, serially renting, right, as a younger person, and I just got tired of living with other people, and I just wanted to see if I could do it. I did get a small inheritance from my grandmother at that time, so I was like, well, let's give it a go. My motivation to buy a house or buy my own place, which was a 525 square foot studio apartment, was just to have my own place, and I was like, this is great. I'm not paying rent. And then I had a couple of chance meetings, interactions with someone who was doing it. And he, and I took a real estate 101 class, and I started reading some books. But really what started me saying, hey, I think I kind of want to do this, is someone said, hey, listen, if you can buy property without really using your own money, right? If you get enough equity in this apartment, or in a piece of property, you could leverage that and keep going. That's just one way to invest in real estate, but that's the one that kind of got my interest, caught my interest. So I was like, okay. So I lived in a studio apartment, fast forward, got married, had a baby. I lived in that 525 square foot apartment with my first daughter until she was almost 1.
Seriously? Good
Yes.
for you, man.
Yes.
Where was that? Where was it?
That was in Bedford Hills, New York. So I grew up
Wow.
in New York, and, I lived in that studio for 6 years, and, while working, but also trying to figure out how to kind of start investing. Like, how am I going to buy another house? So
That's
what I did
amazing.
was,
You were really young. I mean, you don't have to tell me. I'd like to know how old you are, because you were young to buy your first place.
I wasn't as young as 20. That would have been even better, because time is your best friend, right, for investing. I think I was closer to 30.
Still.
But I was thinking about it, reading it, taking class, like I said, trying to find out more about it for a while, for the second half of my 20s. Oh. So when the walls were busting, we had to go get another place, and I rented out that studio apartment for the next 16 years.
Wow.
Yeah, I paid it off twice. Yeah. Well, I paid it off once, and so I had all that equity, and I said, okay, now's my chance. I'm going to go and use the equity. I cashed out, and I went and bought my next property.
Still in New York, or are you down here yet?
I kind of moved them to Florida at that time.
Oh, yeah. Wow.
So that was around 2011. Yeah.
So did you keep the one in New York too, and you went to Florida, or you sold that one?
I kept it, and I rented it out for 16 years. And actually we just sold it in 22 years ago.
Wow. That's amazing. Good for you, man. I think that's so impressive. I really do. And then you're in Florida, and then you did it again.
Mm-hmm. Yeah. And then I started making more money. And then in 2011, also, we did move out of the tri-state area, and we moved into the DMV. And that's actually when I was like, okay, I'm going to get into residential real estate. The more I know, the better. I really need to fully understand, how the process works. And, oh, by the way, I can help myself. right? And then I just realized how much I did like, and I still do like residential real estate, but I just slowly kept acquiring a few houses. I would still say I'd be considered a mom and pop operation, but it's amazing. And, you know, it provides a lot of security, some passive income, a way to kind of offset your taxes, lots of things. That's another video too, but
I think it's so impressive. I
yeah.
really do. I mean, to think, like I said, that you could do that, and I think 30 is still super young. And then you do it once, and then you move to a whole different state and do it again. And then you move to a whole different state again, decide to get your broker's license, not once, not twice, but 5 times. You guys, this is really impressive. I mean, 5 broker's license, and
Yeah.
then to accumulate, you know, a nice portfolio at this point. I don't want to embarrass you, but I think you have like 7 of them now or something like that. I think you told me.
Sounds about right. Yeah.
That's amazing.
Yeah.
I mean, that is amazing. I mean, you are establishing your life, like the rest of your life, and not having to work like we do right now as, you know, as real estate agents. And I just think it's so impressive.
It's
So
fun.
what are you finding with your tenants? Like, are they getting nervous about rents? Are they like, do you ever hear anything on the other side? I'm just curious.
So I'm very lucky, knock on wood, that I would say 3/4 of my tenants are in their 4th to 5th year renting with me.
Wow.
Right. So that's a huge part of my approach to, you know, investment. Right.
Yeah.
I really keep in mind who I want my tenants to be. Right. And the last 20 and 21, because of the values rising, and we touched on the real estate taxes increasing quite a bit, especially in Florida, and the insurance costs rising quite a bit every year in Florida in particular. I have had to raise rent a little bit more than I normally would. And I typically don't like to raise rents too high or even too often when I find a great tenant. But the numbers are the numbers are what they are when the margin is getting really much tighter. So I've had conversations like that with them. Like, listen, I know I haven't raised your rent really in 2 years, but here it is. And I like to explain what's going on. And most of them, they get it. They understand, you know. I always say, you want to buy something, but.
Right. I think I'm sure you're very fair. And from what I hear, especially about insurance in Florida, it's kind of gone crazy. I mean, I guess with your properties, you already have home insurance, but is existing home insurance skyrocketing like I'm hearing about what's happening in Florida, or is it once you have it, you're okay?
No. So it's if you're going to borrow money to buy a property, you need insurance. And then it gets reassessed and looked at every year. So it's either you get renewed or you don't. In Florida, they have a 5-point system that kind of insurance companies look, you know, the bigger systems, roof, plumbing, et cetera, to see, you know, how they're going to do that. But I think in one of your last videos about Florida, a lot of private insurance companies just left because their coffers were being emptied. They're like, we just can't cover that. So they just left.
Yeah,
So,
I know. I did do a video in Florida, and my mother lives in Florida part of the time. And when her husband passed away, unfortunately, a couple of years ago, and she had to take over the deed, everything had to be reevaluated, and I had to find new home insurance for her in Florida, and it was impossible then. This is like 2 years ago. I can only imagine after the storms now. By the way, if you are just joining us live, we are talking about Laurel because she's invested in a lot of properties, and I think it's really fascinating. But you're also going to talk about the housing market. We'll get back to that in a second. And we also are going to touch on the new administration's policies in reference to the housing market. So if you guys have any questions about any of that, put them in the chat and we'll definitely get to them. We are not talking about politics, though. I'm going to tell you that right now. We are going to talk about the policies in regards to the housing market, but we're not talking about politics. That's another channel. All right, let me see. Swayze says, my previous employer won't give me my W-2 and my lender is saying that I have an employment gap because of this. How do I get my W-2 or get around this? How do you, so don't you have your W-2 from when you did taxes? I don't know how you did your taxes without your W-2. And is your lender, meaning I'm assuming you're trying to buy a house and the lender is saying that you have an employment gap. I'm not a lender. If a lender is having a problem with getting you approved for a loan because of the gap, they're going to have to help you with that. I think if you did your taxes, you should have your W-2 though. So maybe you want to check and go back to your taxes and see where you put that. Do you have anything on that, Laurel?
I agree.
Yeah. And I don't think an employer can deny a W-2, can they? That sounds a little odd.
Why they wouldn't give it to you unless they don't want you to buy a house. But if you did your taxes, you can certainly.
You'd have to have
W-2s to do that.
You'd have to have your W-2.
Yeah.
All right. So let me go back to the article, and then we will get to the Trump article after. Okay. Key obstacles to home buying. Over 1/3, 36% of Americans said that inflation and/or the high cost of consumer goods and services have been the biggest obstacles to purchasing a home. Inflation has made basic goods and services more expensive. I wish there was a way I could get rid of these ads. They're making me nuts. Sorry, people. I get distracted by moving things. Inflation has made basic goods and services more expensive, decreased the value of the dollar, and diminished consumer purchasing power. Out of the housing market in the last 2 years, since August 2022, what, if anything, has been the biggest obstacle to purchasing a home? Select all that apply. So 36% say inflation, high cost of consumer goods and services. 19% other debt, credit card, medical debt, other loans, credit card interest rates have been so high. 14% insecure employment, family instability, 9% uninterested in buying, happy renting, student debt, 7%, 6% uncertainty related to COVID-19. Interesting. Other 5%, 10%, there were no other obstacles. 28%, I do not plan to buy a home. And 6% don't know. Let me just continue. The bottom line, both weaker inflation and interest rate cuts from the central bank should translate to lower borrowing costs on home loans. They won't offset today's high home prices and limited supply of homes for sale. But it's a step in the right direction for millions of Americans who have been priced out of the housing market. Lower interest rates will motivate more homeowners to list their properties for sale, allow home builders to fund more construction, and make it easier for prospective buyers, especially first-timers, to get their foot in the door of a new home. All true. All true. It is very hard right now, I think, for a lot of Americans to justify investing in a home if they still see that their cost of living right now, between their groceries and the gas station and whatever, if they have student loans or childcare, if all of that is going up, I can understand how it's very hard to then buy a home and put your money towards that when you don't know if you're going to need those savings. And in fact, I really think that you shouldn't be buying a home unless you have at least 3 months of savings put away, because with home ownership does come expenses. You know, a lot of things are certain, like your mortgage and your interest rate. If you have a fixed loan, that's for certain. You know, those will not go up. But like we just discussed, your property taxes will go up if your property value goes up. So it's actually a good thing, but it does cost money. And your home insurance will go up if things affect your area when it comes down to home insurance. So, and then there's always, you know, the repairs. I mean, you must know from owning so many properties, what happens when something goes wrong? What happens when something breaks, when you have a leak, when you have a roof, when, you know, you must, I would imagine, Laurel, put money aside for all that stuff, right? I mean,
you have to. So part of the calculation as far as return would be putting money aside for repairs, you know, because, you know, but you're going to protect your investment, right? So it's the same with residential too. I think, you know, it depends on how someone kind of is looking at a home. Yes, it's a home, you're living in there, but it's also an investment. It's also security. You know, your primary home isn't necessarily an asset, but it is growing. So you're paying down your mortgage, and values typically go up, especially in this area, at a fairly regular clip. So the difference between what you owe and what it's worth does keep growing over time. And so that's the investment part for, you know, your primary home or something like that. That list of obstacles is daunting, right?
Right.
Yeah.
I know.
Yeah.
And yet a lot of people do buy homes, and you know, you said something, and I always mean to say this, and sometimes I forget. It is an investment, but it's also like it's where you live. It's where, you know, it's where I raise my kids. It's where I have my holidays. It's where I have people over for dinner. It's where I'm making memories. You know, I've been in my house now for 19 years. It's just December will be 19 years. So it is definitely an investment, usually the biggest investment that people make, but it's also so much more than that. You know, it's your place. It's where your family lives and where you live. And, you know, when I get home at night after being out in the field all day, I'm so grateful. I'm so grateful to come home to my place and my kitchen and my bed, and, you know, and I know that it's mine. Now, do I own it outright? No. So could the bank take it if I don't pay? Yes, they will. Will they? Hopefully not today.
Not today. Not today.
Not today.
Yeah. No.
All right. It's come time. We're going to go over this next article. I am going to bring it up. It's written today, a couple hours ago on realtor.com. It is about Trump and the housing market. We are only focusing on the housing market. If you're watching this on the replay, you have any comments about the housing market, I welcome you to bring them on. If you have any comments about politics, please don't bother, because this is not about politics. I don't even want to talk about politics, but I do want to talk about the housing market. So we're good, right? That's what we're going to do. All right, let me bring it up. All right, let me have another question for you first. Has Laurel ever dealt with rental properties in DC? The landlord-tenant court in DC is infamous for being tough on landlords.
TOPA.
Yeah, it's changed a little bit, but have you? Do you own any DC properties?
Full disclosure, I don't want to become a landlord in DC because of the TOPA laws. When I first moved here in 2011, I kind of looked into it, made sense. But then I learned more about the TOPA laws at the time, which they have changed slightly. I'm not an expert in TOPA, but and I decided that is not the market that I would want to get into for a couple of reasons. Not only TOPA, because it's, you know, it can be challenging, but because of affordability too. Like the numbers didn't work there. But it's changed slightly. And again, I'm not an expert in TOPA, but my experience is that there's timelines that you have to meet, right? There's notices that you have to give. And there's great resources, especially in the title companies that I worked with, in a couple cases where I had clients in that situation, not my tenants, but clients. As long as you follow, you know, the timeline and you manage everybody's expectations, it does work, you know.
It's awful, Laurel. I'm going to stop you there. I've done it. I've dealt with TOPA. I sold a house in DC that had a tenant in it. The story, we don't have enough time for me to tell you all these stories, but the stories, I could tell you what happened. It's actually a story that this attorney gives TOPA classes, settlement attorney, and uses my story in his classes. It was awful. There's so much under stuff that goes on. There's like all this like blackmail, I'm going to say, or extortion. And I put that in quotes because it's legal, you know, but it's like, and a lot of this has changed, but they could sell their rights to somebody else. And then you could do this and you could do that. And at the end of the day, my seller had to pay everyone off.
And that's why I don't.
That's my little rant on
properties in DC with TOPA.
TOPA.
Yeah, too many hoops.
Jazzy. I like your name. Jazzy. Yeah. Hey, Caryn, we're looking to move to the Montgomery County area. Our lease ends June 2025. How soon should we contact you first-time home buyers? First of all, yay. Welcome to Montgomery County. I don't know where you're coming from, but it's awesome here. I grew up here. Not only do I live here now, but I grew up here. And you should contact me tomorrow. We should talk sooner rather than later, because it's good to get all your ducks in a row. The more time, in my experience, you spend getting to know the values in the different neighborhoods, the better. Because then when you're ready to buy, you know exactly where you want to live, and you know what your budget is, and you've already been approved, and it's all that good stuff. So I think that I know my contact information is on my channel, but I don't even know how to put it in the chat. We'll figure it out. You can buy, I think my contact information is on my channel. It's on every video. So just go through that, email me or text me or call me, and we'll set something up. And I definitely think sooner rather than later, because the more time you have to know what you want, the more you're going to get exactly what you want. And I'm excited to talk to you. Thank you. Okay. Now I'm going to bring up the article. You see, I'm kind of like hesitant. I am. Okay. Here we go. Donald Trump will return to the White House. What his presidency means for the housing market. Now, I'm only going to talk about the housing market, so I'm going to jump ahead and go straight to the housing market. Cut regulations and open up federal land for building. Trump has called for slashing regulations and permit requirements that home builders say add unnecessary costs to new homes. This is a quote. "We will eliminate regulations that drive up housing costs with the goal of cutting the cost of a new home in half. We think we can do that. The regulations alone cost 30%. Regulation costs 30% of a new home," Trump claimed in a September speech in the Economic Club of New York. However, by the way, I didn't write this, I'm just reading it. However, those figures appear to be dramatically overblown. The National Association of Home Builders, a longstanding industry critic of regulations, estimates that site work and related permit fees account for 7.4% of the average new home cost, with overhead and general expenses accounting for an additional 5.1%. Many economists agree that streamlining and eliminating regulations would help boost home construction and reduce costs, though it's difficult to imagine achieving the extent of price relief that Trump envisions. I'm going to say right now, I'll take any relief. I'm going to put that out there. Here's another quote. "Fewer regulations and more available space on which to build may reduce home building costs and help increase the housing supply," says Channel. Who's Channel? Did I already see who that was? That said, limiting regulations won't be enough to cut prices in half, and ending some isn't a cure-all for the problems plaguing the nation's housing market. In a statement, the National Association of Home Builders Chairman Carl Harris congratulated Trump on his election win. Throughout the campaign, voters consistently pointed to the lack of housing availability and affordability as a key issue in their voting decisions. Now is the time to take action to address the nation's housing shortage and let builders build, he said. Trump has also said he would open up portions of federal land for large-scale housing construction. These zones would be ultra-low tax and ultra-low regulation, one of the great, really small business job creation programs it will be of all time. We're going to open up our country to building homes inexpensively so young people and other people can buy homes, Trump said in a September event. This is one point that Trump and his opponent agreed on, with Harris also calling for some federal land to be used for housing, and the Biden administration selling some public land near Las Vegas for that purpose. Economists also generally support the idea as one way to boost new home construction. However, one limitation of the plan is that in many cases, there is no significant federal land located near the places where people want to work and live. Nationwide, the federal government owns about 27% of the total land area. Much of that land is located in the western United States and other regions of the country. There may be little federal land to set aside for housing construction. What's wrong with the western United States? Western United States is nice. So this is what this was written, like I said, just a few hours ago. This is from Realtor.com, November 6th, Keith Griffith. And what he's saying, what Trump is saying that they want to do is cut regulations and help builders out and buy some more federal land to create more space. There's more to the article, but what do you think about this so far? I think we can all agree that more housing would be great. We need more inventory. We need more housing. And if the builders need less regulations to create more affordable housing, it makes sense. I'm not an economist, nor a policymaker. I don't know the logistics behind creating these policies that will loosen regulations and still make it safe, et cetera, et cetera. But in theory, it sounds like a good idea. In practice, I think we're going to have to see.
Any builders in the audience?
Any builders in the audience?
Yeah, any builders in
You're trying to keep me out of trouble.
The line that got me was that he was going to build it and slash the prices by half.
I know, but you know what? I think that all politicians tend to exaggerate what they're going to do.
Mm-hmm.
To me, that's not anything new. I'm very, very, very old, so I'm kind of used to that. And we live in DC, so we're kind of used to that. I think that, like I said, I think if there is a way that we can get more affordable housing, great.
Mm-hmm.
I don't have anything bad to say about that. I don't know if that's going to happen or not. Should we see what else they have to say?
Well, I don't think it's going to be quick.
I don't think anything. Well, nothing is ever quick.
It's not going to be quick for sure.
Nothing is ever quick. All right. Pressure Fed to lower interest rates. Finally, Trump has also claimed he would somehow lower mortgage rates, although there is no clear mechanism for the president to do so. Quote, reducing mortgage rates is a big factor. We're going to get them back down to, we think, 3%, maybe even lower than that, saving the average home buyer thousands of dollars per year, Trump said in New York. Mortgage rates have risen for the past 4 consecutive weeks, hitting 6.72% last week. The president doesn't set mortgage rates. If elected, Trump probably wouldn't be able to arbitrarily decide to lower them, even if he wanted to, says Channel. Trump has previously shared his belief that the Federal Reserve should take orders from the president instead of independently setting monetary policy as it currently does. But even the Fed does not directly control mortgage rates. We already said this, which follow the underlying bond market and move in response to investor expectations about the economy, inflation, and future fiscal and monetary policy. The Fed began cutting its benchmark rate in September, but mortgage rates have climbed steadily since then, due mostly to investor fears that a Republican sweep of the White House and Congress could increase deficit spending. It's a good point, quite actually. Yields on the 10-year Treasury jumped to 4.44% on Wednesday morning, up from 4.3% a day earlier, suggesting mortgage rates will continue to rise in the short term. Investors are taking Trump as his word and believe if he wins, it will lead to higher tariffs, immigrant deportations, and a deficit finance tax cuts, and a full employment economy, all of which means higher inflation and more government borrowing. Mark Zandi, chief economist of Moody's Analytics, said on X last week, the recent surge in mortgage rates is a clear indication when investors believe a Trump victory would mean for the economy and the nation's fiscal outlook, he added. So we do know that obviously inflation directly affects interest rates, and then mortgage interest rates are influenced by the Fed interest rates. And we've already talked about that. I can say unequivocally that a president cannot demand mortgage rates to be lowered. I'm not a politician. I don't think you have to be to know that. If I am wrong, I welcome you to correct me, but I don't think I am. What do you think, Laurel? Is anything in there you want to talk about?
Well, I think the theme, in both articles is, they touch on so many things that are not in the everyday person's control. I mean, you can hope and you can wait and you can sit there and you can, you can keep guessing. Like our commenter said, we keep guessing. So my response to these things is, look, there's only a few things that we can actually control, right? So part of the survey in the last article was consumer spending. Right. Consumer spending. How are you spending your dollars? So that's what we can control. So when I was younger, going back to our, when you asked me how I got into investing, I was young and I didn't have a lot of money. So I was like, how in the world am I ever going to do this? I make nothing, and I wasn't looking up interest rates and looking at fiscal policy about in what climate would it be best for me to buy a house? Because at the end of the day, if you haven't saved your money, the fiscal policy and everything could be just perfect, like 3% in 2020. But there was a reason not everybody jumped in, and those are individual. They're unique. So I would say to my clients, look, you look at your picture and do everything that's in your control to lead you to home ownership if that's your goal. And everything else, a little harder to time. We'll take it into consideration, but otherwise.
I love that. I love what you're saying. And I love a couple of things here. First of all, I still don't understand how you bought your first place in New York. I'm so impressed because it takes such confidence, First of all, how'd you get a loan? But we can talk about that another time. But I'm like, to buy a place and then keep it and then buy another one. I just think it's really impressive. And if anybody's watching this replay and you're thinking about getting into investing, Laurel's a person to talk to, because I just think it's incredibly impressive and to have the confidence and to take it on. And you're right. At the end of the day, these politicians can say what they want. You got to look at your specific situation and see if it makes sense for you to own a home fiscally, if it makes sense for you to home emotionally, there's a lot of emotion goes into it, and decide if it's right for you. You're definitely right on there. And I'm like sweating because I don't like talking about politics. I'm like, how do I even do this gracefully? I'm like getting hot because it makes me like uncomfortable. It's like we had an election, we have a new president. I do want to like discuss it because it seems weird not to. But whatever's going to happen is going to happen. I just hope whatever happens doesn't cause any more pain. That's my wish for our country. I just don't want any more pain. I don't want any more divisiveness. I want people to live how they want to live. And if they want to own a home, I do think something's going to have to give to make it more affordable. And it's easy for us to say, just lower those interest rates. Just do it. You did it before during the pandemic. We know you can do it. But, we paid for that because during the pandemic, they lowered them so much to try to stimulate the economy. And then they gave everybody money and to try to stimulate the economy. And guess what? It worked. Stimulate the economy. It worked really fast. And to the point where now inflation got out of control and they went the other way and aggressively raised rate after rate after rate. I mean, I never saw such aggressive rate hikes in such a short amount of time. And I think now we're all like, okay, what's next? Like, you've taken us through the ringer for the last 4 years, between the pandemic and then this and that. Like, what's coming next? And now we're going to have a new administration. And, the words sound great, but the reality is you got to go through a lot of hoops to make these things happen. And so I think we're going to see. Let's see what some of our people have to say. It is great having a property and renting it to great people. I have some great stories of renting to the best couple who actually improved my property. When they left, it was bittersweet. Yeah. And it sounds like you have some of those people too, Laurel, like great tenants. They got married.
That's great.
And finally found their place. I like a happy ending.
That's great.
That's awesome.
That's very good.
Listen, moving to Rockville, December 1st, trying to rent for a year in King Farm until we relearn the area. Any tips for newcomers? It's the metro safe. Where can I go hiking? Need the outdoors. Oh, there's so many great places to go hiking.
Yeah, this is the place.
Yes. If you watch any of my videos, you know that I'm a huge fan of the Billy Goat Trail, and it's part of the Great Falls National Park. And it is such a great hike. There's so many great places to hike. There's great wineries. There's great mountains. And the nice thing about living here in Montgomery County is that you not only have access to Montgomery County, but you can go up to Frederick or go across the river to Virginia.
I went to Virginia on Sunday. It was great. It was beautiful.
Did you? Where'd you go?
Okay, now you're going to put me on the spot.
Okay. Well, I'll keep going. But you can go into DC and you can walk around all the monuments and all that. I mean, it's just a beautiful, beautiful place to live, this area. So I'm super excited for you. King Farm is, right in Rockville. It's easy to get to. Is the metro safe? I don't really take the metro, so I'm not a good person to talk about that. And safety is all relative to everybody. But the hiking I can. And it's in a lot. I think I have some videos that talk about different places to go and hike. But welcome to Rockville, December 1st, coming up. I look forward to having you in our neck of the woods. Where are you coming from? If you're still on, tell us where you're coming from. And what else we got on here? I can't see without my glasses. I always pretend like I can, but I can't. I'm on Zillow researching, and it's depressing to see a condo for $390,000 still costs $3,000 a month after 80% down. Before HOAs, insurance, utilities, how does anyone afford anything?
Mm-hmm.
I'm confused. It still costs $3,000 a month. Oh, after you're putting 80% down to buy it, that's going to be your monthly. Oh, wow. Before HOA fees, insurance. Wow. If you're still on, I'm just curious what your interest rate is. Because that does sound like a lot. Because yeah, it is a lot. I'm sorry. That is depressing. Now I'm depressed. It's a lot. And then, coming from Florida.
What part of Florida?
Yeah, what part of Florida? You got to give us more information. Coming from Florida to up here, it's going to be a little bit of actually, it was 83 degrees today. So I take that. I was going to say a little bit of a weather shock, but not today.
Mm-hmm.
Not today. We were 83 degrees in November. Yesterday, Laurel and I played tennis. It was like 84 degrees. It was,
it was a little uncomfortable.
It was a little hot.
Yeah.
Let me, Gainesville. Oh, University of Florida, college town.
Nice.
Do you know Gainesville, or do you have any properties around there?
I do not have properties in Gainesville. Mostly in the Jacksonville area, up towards Yulee. Yeah. So
I do not know where that is. So I lived in I think I told you this, Laura. I grew up here, but I lived in California for 9 years before moving back here. And that was the one thing I couldn't wait to get to the seasons. I couldn't wait to see the fall and the leaves changing and the winter, and we get a little bit of snow and some hot chocolate, and it's the best. So I'm excited for you. You're coming at a good time. I kind of wish the 80-degree weather would go away. I'm over it. All right, let me just finish this last two sentences, then we will get rid of this article. Trump unlikely to solve the housing crisis, experts say. Most economists agree that a dire shortage of homes is the root cause of the nation's housing affordability crisis. Housing supply, this is another quote, housing supply or lack thereof has plagued the U.S. housing market for at least a decade. This is true, actually, since 2008, which are estimate of a range of 2.5 million to 7.2 million unit gap from 2012, that's actually more correct, to 2023, depending on the assumptions of the analysis, says McLaughlin. Due to a combination of both geographic and legal constraints on development, we simply haven't built enough housing when and where we needed it most. And that is very true. Because of 2008, and it took us all the way to 2012, builders stopped building because everyone got freaked out. And there was just like, there was so much going on because of all these faulty loans and foreclosures that they stopped building the way they used to. And this was the beginning of what's created our housing shortage. And now we're in 2024. And it didn't help that our existing home sales are at the lowest they've ever been. I think they're competing with last year, but I think they're even lower than last year, mostly because a lot of us refinanced and are just not going to move now, and the builders can't build enough to make up that gap, like that quote said. So we are back to where we started. A housing market that is unaffordable, but inventory is up in a lot of markets in our country. It's not necessarily our market here, Laurel. I haven't seen a lot of inventory where we are, at least in Montgomery County, other parts of Maryland, perhaps. But I do a lot of research for my videos every week. And there are places around the country. In fact, Florida is one of them. They talk about the inventory has really gone up a lot. I don't know if you can speak on that. And with more inventory, that should soften home prices. If we could get a break in interest rates, that will combine with a softening of home prices to make things more affordable.
Mm-hmm.
I think at the end of the day, it's kind of like what we both said. If you're planning on staying for, in my opinion, at least 7 years, and you can afford to buy a house, I think it's the best investment you could do for yourself. I think it's the best investment you can do for your family. Look what you've done for your parents. They're living with you now. I know you still have one kid at home, right?
I do. I do. She's a senior in high school.
Yeah. Well, I heard they come back after college.
Mm-hmm. You tell me.
I don't know yet. I might just went, but that's what I've heard. I know that like people are getting very creative in how they're buying houses these days, with their friends and with multi-generations and this and that. But what I've heard, the word on the street is that a lot of kids are just coming back and living at mom's house.
Well, they can't afford to buy anything.
Right.
They can't afford rent, especially in these areas, right?
I know.
In metropolitan areas it's pretty tight.
I know. My hope and my dream is to be able to help my kids with that, at least that first down payment, to start them young, kind of like you started young, I think I bought my first house when I was 34. So not much older, but I sold it and then bought another one. I should have kept them.
Well, shoulda, coulda, woulda.
Hey, you know what? It's not too late. It's not too late.
Never. But you use the equity of that house probably to help you buy the next one, right?
I did. Yes.
Yeah.
So we bought one in California and actually renovated it, and then sold that one and moved here and we used all that to buy this one. And I'm still here, and I have refinanced when it made sense, so I don't have my house paid off. But I could possibly keep this and rent it out when we do move to our next one. I mean, that is a thought, I should really think about that. I'm going to talk to you more about that, because you make it sound so easy to have all these properties and these great tenants. I need to know what the downside is.
That's another
Come on, you're going to leave us hanging?
I think, well,
give me one downside, just one, so I can go away and not think that I'm like going to go buy something tomorrow.
That would be hard for me to say, because
you've had great tenants, it sounds like.
I have had great tenants. It doesn't mean that I haven't had less than great, but when I personally, when I buy a property, I'm thinking about the tenant that I would like. So I buy the property. I don't do it, solely by the numbers. Maybe I should, right?
I think you're doing okay though.
Right. But I think who would I like the renters to be?
That's sweet. Do you ever buy properties with the renters already in them?
I do not, but that's basically how I started. You look at the market. I went down to Jacksonville in 11, at that time there was a lot of deals to be had. So there is opportunity, right? So I realized that there was an opportunity there, and I looked, and you do your market research. If that's a good area, you feel it's a good area. And then I said, who do I want my tenants to be? And I wanted to be young professional people, right?
So then you looked in those areas where they live,
what would they want? It's not necessarily someone right out of college. They might have had a condo at first, or rented a condo once, and this might be their first place, a house. So I chose single family houses. They need a little bit more room. They want to have a dog. They're thinking about a family, but they're working. So a young professional people. So they want to they want a little bit more space. They want to have a yard, and everybody wants somewhere clean.
Right.
And everything works, and I take care of my places. So that's how you keep tenants. It might cost a little bit more money, maybe upfront, but also those tenants tend to take care of the property too.
Yeah. I think it's awesome. I'm telling you, I'm so impressed with you. I tell you this every time I see you. I just think it takes a lot, and I hate to say this, but as a woman to be so entrepreneurial and to buy properties and rent it out and be so thoughtful about what you're doing and how you're doing it. And I know you really well. So I know you are exactly who we're seeing right now. You're a very thoughtful, very positive person. And then to own properties in different states and manage them all. I mean, I'll never forget. You're like, I'm selling a house in Maine. I'm like, are you licensed in Maine? Well, yeah, I went and got my broker's license in Maine. Like, it's awesome. I just think it's the coolest thing.
Well, I go where my clients want to go. That was for family, friends. I mean, I still have my license there, but I will go where, they need me to go. That's a little bit of an outlier, but
you're very humble. You have to take classes and tests to get your broker's license. They don't just like hand it over to anyone. So
Right.
you're very humble, but I appreciate it. It's fine. I taken up much of your time tonight. If you all are watching this on the replay, if you have any questions for Miss Laurel Murphy, put them in the chat in the comments, and I will have her get back to you. I hope you enjoyed this live stream. Laurel, thank you so much for coming on. I really appreciate it.
Yeah.
As you know, I was very nervous about talking about certain things because I know it's a very sensitive time in our country. And like I said, we don't have a crystal ball. All I hope is like that everybody lives their dream and like that no more pain is caused and we all can get through this together and it's going to be great. You know, like why not be optimistic?
So I just wanted to get back to Jill. Do you want me to private message her or?
Oh, perfect. Yeah. Why don't, you can do that, or I can put your website. I'll put her website right in the description of the video.
Okay.
Yeah.
I do have a rental that's coming up near Rockville. Actually, it's coming on next week, and I used to live there, so I know all about it. So that might be somewhere for you to start, Jill, to take a look. I don't know when you're looking to move, but you can get my contact information from Caryn.
Yeah, or we'll do it and that way you can do it. So you can make sure everything's the way you want it. Just do the first comment and we'll pin it and just put your information, your website and everything there in the first pinned comment. And that way Jill can find you and everybody else can too. That's perfect.
Okay. So you want me to do that now?
Yeah. Well, I think we have to finish the video.
Oh, okay. Okay. Sorry.
Yeah. When I think we're going to finish now. We're going to wrap up, but then go in and the replay and just just make a comment because I don't think the chat translates.
You can also Google Laurel Murphy Real Estate.
We're going to make it easy for her. We're going to put it in the pinned comment. We're going to do it. We're going to do it right now.
Yeah.
Thank you guys for watching. Thank you for participating. Thank you so much, Laurel, for coming on. I'm going to see you tomorrow, I think. Yeah, I'll see you tomorrow.
Yeah.
And like I said, if you're watching the replay, put anything in the comments. We are going to put Laurel's information in a pinned comment, so you will have it there. We're going to do it right now. And that's all I got. Bye, everybody. Thanks again, Laurel. I really appreciate it.
Of course.
See y'all later.
See ya.